Friday 23rd of November 2024 price action review. We are going to look today at the NQ and specifically focus on the last hour of trading and the market on close macro. The daily chart firstly, we can see that price has been hanging around the daily CB. We can see that on Tuesday price took out Monday's low and previous week low, then rated up higher up into this daily CB. We have then been trading in between the discount low of the daily CB and consequent encouragement of the daily CB. Note how the bodies on Wednesday, Thursday and Friday stayed inside of the daily CB, and how Thursday and Friday's trading traded up into that consequent encouragement level. Also interesting to note is that we have of course these small range candles, which are volatility contractions, as they well, that's their name, which means that small range candles like this with long wicks are generally precursors to large range candles. This is even more, this probability of occurring next week is even more enhanced because Friday's trading, which was today, created a inside day, as it did not take out previous day high nor previous day low. So that is another reason to look for range expansion next week. But let's look into the 4-hour chart and see what's going on there, specifically focusing on today's price action. So you can very clearly see on the 4-hour chart that price has really been trading in between the discount low of the daily CB and a CE of the daily CB, and because of that it was a pretty low probability price action due to a high resistance to liquidity growing conditions, which that is the case when we are pretty much held inside of a consolidation of range bound conditions, as price trapped in between opposing arrays, which is the discount low and the consequent encouragement level. If you look at premium discount, we can define this low here as the dealing range low, this high as the dealing range high. If you then would imaginary in our minds create a premium and discount range, you can see that price is equilibrium to premium. That's where price really resides inside this area. So that's interesting. 1-hour chart. I annotated one specific level here, which was the catalyst for the last hour of trading and market on close macro expansion. Okay, moving on to the 50-minute chart. Price dropped down throughout London, right into that discount low of the daily CB after taking out sell side. Reversal, smart money reversal. You can see here market maker buy model fractal inside of it. Rises up, comes back down into a short-term discount, 5-minute pre-D array, probably around this area. And raises up higher, takes out these relative equal highs with low resistance liquidity run signatures. How so? Because this high is higher than the high next to it. So a high, lower high, or a failure swing, a low resistance and liquidity run signatures above here. Clear draw, reaches above these, right into the daily CB consequent encouragement. Plunges lower, right back down into that same old discount low of the daily CB, raises up higher again. You see here the back and forth movement taking place in between this daily CB consequent encouragement and discount low. Notice also that all of this price action occurs in and around the midnight opening price. It is very typical for range-bound consolidation days for price to stay gravitating back and forth the midnight open, hanging around it and not leaving it and expanding one sidedly higher or lower. So this is one of the clear signs that you are in a consolidation or range-bound environment, high resistance liquidity environment, when price continuously hangs around and comes back to the midnight open. I'm not gonna then specifically focus here. We can see price initial trade down to this fair value gap here, discount fair value gap, violated to trade down into the discount low of that daily CB, then raise up, but then comes back down again, right back into that same old fair value gap. Notice this time the bodies are respecting this discount fair value gap and repels price going higher to take out the AM buy side liquidity here throughout the lunch hour. So what is this? This is a reclaimed fair value gap. You can see very clearly that the second time it trades down into that same fair value gap, it repels higher, and that's perfectly permissible. It's not that once it's traded below the bodies that it is invalidated for forever, right? We just discard it from our chart. No, we refer back to it if it comes back down to it again. So you can use the same level and price finds support again. Also reaching for that daily consequent encouragement level again, which was like every off trading after this trading was like after this setups for predominantly around these levels, being the CE level and the discount low of the CB on the daily. Either for a drawn liquidity or a key level to key off from, right? So then for the PM session, we can see that price declines lower after taking out AM buy side, draws back down into this inversion for value gap, and this is where that last hour of trading setup occurs, which I'm going to now look into. But first, I want to note still that we use that lunch buy side liquidity as a drawn liquidity here. An internal to external range play, you could say, from internal range liquidity being this inversion for value gap to reach up into external range liquidity being the lunch buy side liquidity. And this then sets up the stage for a market maker buy model fractal on the 1 minute chart. So that's what we're going to look soon into. Alright, 5 minute chart. You can see that I've cleared the chart up a bit. I just only left the levels of real significance on here. You can see this order block is converging with the inversion for value gap on the 50-minute chart and the midnight open. And you can see that it also had these very long wicks in the PM session, which is something I counted my stop loss for on the 1 minute, which we look into after this. But we can see that price reaches down into this discount wick, found support there, repels higher, comes back down into order block with these relative equal highs. Notice also that we are below the opening price of the PM session for the power of 3 of the PM session. You want to see when we're looking for longs, which what I was looking for when we reach down into the inversion for value gap. We want to be below the opening price, in this case the opening price of the PM session, which we are here. So that's another, you could say complements, but it's really the basis on why you want to frame trades, right? Those opening prices are just like, they're really key in ICT concepts, since they are like literally the base of power of 3. But we can zoom now into this order block range here on the 1 minute. You can see what it provides us for a setup. Okay, 1 minute chart. You can see here clear defined market maker buy model. using that order block on the 5 minute as a discount rate to key off. Basically use it as a higher time frame PD array relative to the 1 minute chart. You could also use this here as perhaps the smart money reversal. I thought SMT took place here, but I'm not entirely sure. But then you could also use it here. You just have to allow for the discount retracement that takes place here to reach down into the 5 minute chart. But this is like the most ideal market maker buy model to get in line with the market maker buy model. So I have here a SMT with VS at the lows, inside of the inversion for value gap of the 15 minute chart, and inside of that bullish order book on the 5 minute chart. Before that, notice one thing here: price reached down into the 30% for value gap, respecting CE. So that was another indication that leads to me being bullish, as those significant discount arrays were being respected. So price showed displacement higher, change in state delivery once price closes with this up close candle above the opening price of this down close candle. That's a change in state delivery going from sell side delivery with these down close candles to buy side delivery with up close candles. From bearish, it changed the state of delivery to bullish or buy side delivery. Price really showed displacement higher, which is exactly what we're looking for. Then hangs around for a bit and drops rapidly lower into this BPR. And this is like the low risk buy slash 2022 model. Because if you just didn't even look at the BPR, just look at fair value gap, you would enter here long using the 2022 model entry technique. Stop loss accounting for this lower gap here using the rules of the 2022 model. You can refine it a bit with the BPR. Could perhaps place it at the lower end of this gap, expecting it to stay open because of the BPR. Because of these long wicks, I would account more than usual for that, especially going into the close on Friday. You usually have more volatility, and I usually am a little bit wider for my stop losses. I'm not going to make the ultra tightest stop loss because you have these more longer wicks then, especially with lower volatility or smaller ranges when you have like more of these long wicks. The price drops down into it. Notice how it exactly stops dead and extracts at the discount low of that BPR, then repels higher within the same candle, closing far above it, then rapidly repricing higher into the buy-side liquidity draw, which is the original constellation, and that completes this market maker buy model. So you could also note this time 50-50 or like 10-4-4, 10 prior to 4 of 350. It's just how you say it. That's the start of the macro here, 315 to 410, and that's the exact time price dropped down into this BPR and then starts to move higher rapidly into the buy-side liquidity draw during that market on close macro. So you can frame the risk with like the standard 2022 model rules using the